Our next panel is on credit and understanding the basics of credit. I think we all believe we know credit, but I don't think you know credit as well as these folks know credit. So I'm going to allow these folks to introduce themselves for this excellently moderated panel. And Ms. Burke, the floor is yours.
Awesome. Great afternoon, everyone. Let's get some energy in here. Yes, love it. Awesome. I am Karen Burks with Burks Management Firm, and I will be moderating this great session with these great panelists on today, asking questions which you can use within the classrooms with your students, also with just talking with your colleagues as well, and sharing that information. Family members, right? Because they also need that information as well, right? So, and I hope you all enjoyed your lunch. That was pretty good, so let's give a hand clap for that. I always after lunch, sometimes it's like, kind of dies down, but I want to pick up that energy for this session. So this is the Credit 101 that we will be doing. Definitely go to your handouts and read a little bit more pertaining to their bios, but I'll do a brief introduction. So we'll start off with Ms. Nekiba Johnson, Financial Counselor, Pelican State Credit Union, and Adam Brice, Senior Vice President of Lending, EFCU Financial. So again, let's give them another hand. Awesome. So let's get started, right? So we can get through this portion. So I have some questions for you all. Ms. Nekiba, I'll have you to start off with, all right? So why is credit important, and what are some good ways we can incorporate this within the classrooms to talk about credit with our young people?
Okay. Well, credit is important because it plays a major role in many aspects of our life. It can determine where we can live. If we're renting or buying, doesn't matter, because most landlords, they do pull credit. It can determine the type of vehicle you drive, how much you pay for car insurance, even where you work, because most employers pull credit. So it's important that we build a healthy credit history, because it also makes a more stress-free in the financial area.
Absolutely. Yes. What about yourself?
Yeah, just to piggyback off of what she was saying, I think she's absolutely right. Credit to me is just about everything. If you don't have the financial, the money, credit is everything. It allows you to go buy furniture. It allows you to go buy a home. It allows you to go buy a car. It allows you not to put a deposit down when they run your electricity bill. So if you get electricity, it's everything. And it's extremely important that the most thing that you can do is make sure you make your monthly payments on time. That is one of the most important things when it comes to credit, and that's why credit is so important, because everyone looks at credit before you go buy something big. Even when you're going to buy that diamond ring for that fiance of yours, anything like that, most people are going to pull credit, and that's when it's going to be important, because that can determine how big of a ring you can buy.
Yes.
So we all know. But that's kind of my reason.
I love it. Awesome. So we're going to dive a little bit deeper into credit scores and credit, of course. But let's talk about the credit score. How is it calculated, the range, and especially, again, just explaining that to young people, because that's their first time kind of understanding about credit scores and how to establish credit, all that. So talk with us a little bit more about how is it established, what is the score, all of that great stuff. Adam, you want to
Sure. When I was a young kid, my mom actually did me a favor, and you can do this for your children as well. When I was about 13 or 14, my mom added me as an authorized user on one of her credit cards. That means I had no credit responsibility towards the card, but I could have a card of my own and I could go swipe it and it would show up on my credit report, and immediately I would start establishing credit. And to establish credit is important because you want to start building at an early age. The more credit you have at a younger age, the more that you're paying on time, you're showing consistency making those payments. You're showing length of time that you're able to make those payments. And when you're able to start early like that, and I'm not saying you have to start when you're 13 or 14, when you get 17, 18 years old, you're able to apply for a credit card, you should do it. Get a small one, use it responsibly, maybe like a $500 balance, and go use it for gas, and then pay it off each month, and start establishing yourself to build that credit. And as you go, maybe you'll get another credit card, establish, another revolving account, and you pay on those on time. You pay them, over a length of time, and your credit score starts to build. You could see a 750 credit score based off of 2 credit card accounts that you have open for maybe 2 years of time. And as you're going and over the time, you continue to build credit, you continue to open up different loans, go to the dealership or go to your own credit union, get yourself an auto loan. And with this score and some of the establishment that you have, you'll be able to get yourself, a nice car, maybe at a good rate, depending on your credit score, because most lenders are risk-based pricing driven, meaning your credit score is going to dictate the rate. All right, Nekiba.
I like it.
As far as entering that information into the classroom, can you hear me?
Put the mic up to you.
As far as entering or discussing credit scores in the classroom with your kids, what I would recommend is kind of getting them to look at it as their school grade. The higher the school grade, the better. So same thing with the credit scores. The higher the score, the better. Credit scores range from 300 to 850. And, a student knows that they don't want a 69 on their test, so, they wouldn't want a 300 credit score. So like Adam said, managing it responsibly is very important. But that's how I would, kind of discuss credit scores with kids in school. Yes, ma'am.
What's the difference between them? I threatened my children to get credit card in college, but they had established, I was going to say they established credit or savings and stuff, or just no questions yet.
We'll hold all questions to the end, make sure we remember that one. No worries, that's a great question though. But definitely, let's get back to this portion as far as credit reports. How do you calculate getting from that 300 to maybe 850? How is it calculated for individuals?
There are 5 scoring factors that goes into the algorithm for credit scores. The bulk of it, or the most important, will be payment history. That accounts for 35% of the score, so we want to educate them on how important it is to repay time. 30% of the score is based on your credit utilization. That would be, like Adam said, the balance on their credit card versus their limit, keeping the balance low. 15% is their length of credit history. 10% is types of credit, making sure they have a healthy credit mix, at least that one credit card and some type of installment loan. And then the other 10% of the score is based on new credit.
Okay, great. All right, so what is the biggest misconception pertaining to credit and credit scores? Between credit and credit scores, what are some big misconceptions? For example, they may say, oh, well, you can get this taken off your credit within 7 years. For example, oftentimes that's not always true when it comes to credit scores. So if you can kind of elaborate a little bit more on what that is.
So in this situation where Karen's asking, she's talking about, having credit, dictating credit scores. And I think, some of the examples that I can kind of give you are some of these finance company mail-ins that everyone gets. I get them too from different types of, we call them finance companies in our financial sector. They're good loans. They're loans that you can make instantly in instant time, but they do have an impact on you when you're applying, you're opening up a new account, that automatically drops your score as soon as you open up a new account. Credit bureaus tend to look at finance company loans a little bit different, and they score them a little bit lower than basically a different financial institution's loans, such as like a Pelican and EFCU loan. They're scored a little bit differently. But then, another thing that I think about is how many of y'all drive around the city, you stop at a red light on the corner, and you see a sign that says, hey, call me, pay me $100, and I can fix your credit. How many of y'all have seen those signs? Okay, so have I see them all the time. Guess what? Yeah, they can stop some of it. What they're going to do is they're going to send letters to every creditor that you have and that you're maybe been late on or you're past due on, and they're going to say, hey, maybe we can try to settle this account. And while that's a good thing in a way for you, it's going to be a bad thing on your credit report, but it's going to show negatively that you settled your account, you couldn't pay everything that they've lent out to you. And to me, that's a very big misconception that I see a lot of people probably come to me, and I hear some of these stories, and you see 8 or 9 trade lines on their credit report that says, settlement accepted on this count, in financial counseling, and a lot of those really dictate, a low credit score and can drive your credit score down.
Okay.
Since Adam mentioned about the credit repair companies, one thing that I want to share and make sure that people are aware of is that they not only do they dispute inaccurate information, but they also dispute positive information sometimes, and that can cause more harm to your credit report, your credit history, and your score. So really just empower yourself, do your own research. Reach out to your financial institution for assistance with rebuilding your credit.
And just the B part of that question would be, what would be some best practices in order to better your credit? Perhaps if there was some accurate things that was on there, what should someone do if it is something that is on your credit report and it needs to be corrected? What are some steps that should be taken?
So it sounds like disputing some information. You can dispute inaccurate information on your credit report, absolutely. It's important to make sure that your report is as accurate as possible. So as far as disputes, you can do it online directly with that credit reporting agency. If it's only on just that one, if the error is on 2, then you definitely want to dispute it with both of those credit reporting agencies. Always include supporting information, documents for your dispute, or you can always send a certified letter, which is something I would highly recommend. Explain your reason for disputing it, make sure you have your supporting documents, ask that it be removed or corrected.
Just to piggyback off of that, also reach out to the vendor. Go back to the finance institution who is, showing that you may have had some type of delinquency or anything. That also really helps. So you want to attack it from both ways. Nekiba is absolutely right. You should always reach out to your credit bureaus, but go out to those vendors too and try to dispute it with them because they can fix it in the bureau too.
That's true. That's very good. This is some great information. All right, 2 more questions and then I'll open it up to the audience as well. So my next question, outside of obtaining a loan, how else can low credit scores affect someone's life?
Low scores can affect a lot of things, just outside of getting a loan. A lot of places of employment will pull your credit before, they even give you a phone call. And they may have a certain level of score that they won't accept. So just off the bat, not only are you being impacted by, getting a higher rate loan because your score is lower, but then you're going to be impacted on job opportunities. Say you go to energy, you just purchased a house or you're renting a house, you want to get the electricity turned on. Energy's going to run your credit as soon as they get your name. And depending on your score can dictate whether you may have to put down a $500 deposit, $1,000 deposit, or maybe no deposit at all. And that'll go for several other utility companies. They're going to all pull your credit. Maybe you want to go get Cox Cable. They're going to pull your credit, and it's going to dictate what you can do and what kind of deposits you can do. So yeah, credit scores, obviously you always want to kind of try to keep them as high as you can. But with a low credit score, it can impact a lot of things.
And definitely cell phones.
Yes,
As
that's
well,
yeah,
with the young people, yes.
When the credit score is on the lower end, we typically, receive a higher interest rate on whatever it is, the loan or the credit card. So if we're paying an additional $200 on our car note, which it could have been $200 less, just think about what else you could have used those funds for. What other household expenses that $200 could have went towards, or even just into your savings to build, a healthy savings, an emergency fund, which is highly recommended.
So last question, and then I'll get to you guys. I see your hands. So this last question, it states, my spouse/parent died and I discovered a lot of debt. How do I have to pay this debt? Or how does this person make sure that they're not responsible for that debt that happen within this process. And of course, within the past 2 years, a lot of this has been happening. So kind of walk us through what that looks like for individuals that perhaps may have experienced that.
So when you experience a death in the family, let's say a spouse, and they have some debt, depending on what the type of debt is, will depend on what type of responsibility you may or may not have. Obviously, if, let's say you have a joint mortgage and you and your wife sign on a house, well, that's going to be still your responsibility no matter what. But let's say there's something individually in your wife's name. Let's say she's got a car, for instance, and she's been paying on it. Well, your wife passes away unexpectedly. Typically, the financial institution will come to the spouse and give you an option whether you either want to continue to pay on it, and maybe they can try to refinance the loan into your name, refinance the vehicle in your name, or you can just turn it back over to them, as they would deem it as a repossession, but it's more like an asset coming back to them. So, those are some ways, that can happen.
One other thing that came to mind, my background is in lending as well, and Adam and I worked together previously, and I want to just point out some lending products in which, if someone does pass, what options do they have just based on the lending products. They can choose like different types of warranties. If something happens, they lose their job, so that they don't have that hardship of understanding of, what happens when that person is not able to bring in a certain amount of money each month. Could you tell us a little bit about what those options are? And I think that's kind of across the board for all lending places of financial institutions, should I say. So if you can kind of talk about that for us.
So a lot of financial institutions, when you go to originate a loan, auto loan, unsecured, credit card, whatever it may be, they may offer you something called payment protection or financial protection. And what that is you'll have some options, whether it be some type of life insurance on the loan. It could be some type of disability. It could be a loss of employment, loss of life, things like that. And you'll be able to choose those things. And if something were like that to happen, say you lose your job, or you went on disability because of an accident, if you have something like that attached to your loan or to the loan product that you have, this is when that insurance will kick in and it will cover you in those types of events that may have occurred in your life.
Awesome. Thank you so very much. We'll get back to your question, ma'am, that you had.
I was just asking if they didn't have credit history and they're of a certain age and have a decent job offer. But if they have a lot in savings already, does that matter, or they still don't have a high credit score? But how will that affect their credit score? Say they have several $1,000s they saved while they were in school, but they don't have credit cards.
You're speaking in reference to employment?
No, I'm asking about like when they go get their utilities turned on for their first house or whatever.
And honestly, it's not going to matter. You could have, unless you're going for. So her question was, let's say someone's coming to apply for something, or talking about credit history, and not having any credit history at all, but maybe they have $5,000 or $10,000 of savings, but you're going to apply for a loan. No, the answer is no. The credit score is going to be the ultimate driver. Your credit history is going to be the ultimate driver. Now, with that being said, let's say you are going to buy an auto loan, or you're going to buy an auto at a dealership and you're applying for an auto loan. Let's say you put $10,000 down out of your savings, but you don't have a credit history. There may be a lender out there who would be willing to take a chance on you based on the big down payment that you have, based on your job history. And if maybe you don't have a credit score, but you also don't have delinquency or collection activity in your credit bureau. So, a large down payment like that can dictate, an approval at certain times.
Very good. We have one other question over here. I'll get to her and I'll come right back to you.
Come on, Oprah. Can you hear me? Listen, when you was talking about giving credit to kids, I just think 17, that's a young age. Because I have 2 kids in college now, and all kind of credit card companies are sending things to college kids, and they really can't afford it. So basically, I had to pretty much tell my son and daughter, no, I say cut it up when they send you something, because right now, you're in the stage in life when you're focused on college, you know, you're not working and you're depending on your parents, you know, to a certain point, because if you're trying to be successful, you can't afford to get in any kind of debt right now. You already got the big debt already going to college. So I just think that trying to tell kids to get credit at a young age is just putting them in behind the 8 ball too young. If you're 17 or 18, I think that's probably too young. I might be wrong for that based on what other credit people, what you're saying, but I just don't agree with it, because you have to be, because you want kids to make sound decisions, but you know, you got to think about the mindset of a 17-year-old or 18-year-old. They get a credit card, so I have $500. They out with friends. Okay, I can pay for this. I have a credit card. You see what I'm saying? And if they're not working anywhere, it might be good for their parents to bail them out. Okay, that kind of thing. So nothing's wrong with getting a credit card, but I just think that maybe after you finish college or something, and you have a job or something, maybe then you can start doing it. Because I can tell you right now, they're targeting college students.
Let Nekiba come.
Okay, you have a response to that.
So what Adam
Yes.
originally,
And it's-
what he stated was adding them to your account as an authorized
Yes.
user. So that's one way you can add them to your account as an authorized user. They don't even have to have a card. You maintain your payments, you know, properly, your utilization, and that helps to build credit. Yes, in addition to that, having them establish credit after college, that's behind the 8 ball. It's important to help them, you know, learn early on how to properly manage and maintain credit.
Very good. Okay, sir, this is some fruitful conversation. All right.
Okay, question is why are there more than one, why is there more than one way to score credit? For instance, Capital One offers Credit Karma and Credit Wise, and my score is different from there. When I go to finance a car, it's different, or refinance my house, it's different. Why are there several different ways of scoring credit?
Great question. All right.
There's FICO and Vanguard, and how many other ones are there?
So FICO is the official calculating system for credit scores. That's what lenders use. Credit Karma and some of the other monitoring services, they do generate credit scores, which are through Vantage Score 3.0. So that is, you know, the difference between those scores there.
But they're based all on the same factors, or different factors, or why is there a difference in the scores?
There are different factors, and going off of what she was saying, there's also, there's 3 primary bureaus. You have TransUnion, Equifax, and Experian. Those are your 3 main bureaus. Now, you will have 3 different scores across the 3. They're going to weigh things differently depending on your credit history, your payment history, delinquency. They're all going to weigh differently. But those are your 3 main bureaus outside of your FICO. And when you're going for that auto loan, you go to the dealership, you go to a credit union to go apply, they're going to pull either 1 or 3 bureaus, and they'll maybe do an average, or they'll just go off the 1 score. But you know, the scores will be dictated depending on, you know, what their algorithms are, and each bureau has a different algorithm.
But they seldom use the Vanguard. They don't. So Credit Karma and Credit Wise.
I think that's just more of a system to kind of give you an idea of what your credit score is. But I don't know a lender who goes to Credit Karma and says, "Let me pull a Credit Karma, and we're going to dictate, you know, how you get a loan off Credit Karma."
Credit Karma is good to monitor. It will give you information, but it's not what you base your stuff off of.
All right. You have a mic here. Let's go.
So, I know the answer to your question. I was in a workshop with you at church, and they explained to us that there's new software that comes out that the credit bureaus, the Equifax and all them, they use those in meetings. But Credit Karma and some of the other ones that let you monitor, they using older software. That's why it's a different score. That's not my question. That's just the answer to his question.
Where's Lane?
You were saying how the different histories were like 30%, 35, different things of that nature. How can I find that information? When you was breaking down, you were saying like, the history payment was 35.
Leslie had a poster with that information on there, so some of y'all have it.
Okay, because that's what I was trying to figure out.
Thank you, Leslie. All right, my last question, Ms. Claire. All right, I'm coming back there as a talk show host.
Okay.
Right?
All right,
Well, I have a question and a comment.
Okay.
So I'm going to piggyback on this lady's comment, but here's my question. So when you mentioned that your parents put you on their credit card, I'm throwing you fell out the chair. But you were mentioning you were a minor. God bless your parents. I would never have done that. But
I didn't have
the
a
question
card.
is, since you were a minor and you were being added to someone else's card, you said you don't have any credit responsibility or debt responsibility. So where is the benefit? What you're doing, it sounds like, is that you're setting your parents up for a potential bad situation because you could drag them down. Yeah. How do you establish credit because you're being added to someone else's
You're just
card?
reaping the benefits.
I was reaping the benefits. I didn't even have a card. My mom just added me to start building my credit. I never had a card. I didn't even know I was on it until she told me 3 or 4 years later.
All right, I'm going to say 2 more questions. All right.
Just a past comment from a mom, and that is that I wanted my child out of my house. And when he tried to rent a place, they ran his credit and he didn't have any. So he couldn't leave.
Great example. Thank you so much for sharing that. Over here with a question, right? Okay.
Let's piggyback on what's being said. Give you an example. I had a nephew had inherited some money. He went out and he purchased a home. Later on, in cash, let me say that. He had no credit history. With the hundreds of thousands that he put out there, when he went back for something else, there was no report. Okay, so in essence, all that we're saying here, just make sure that we educate the children ahead that they do need, because he had to go from vigorous whatever to even just get a car now. And he had the money where he could pay cash for homes.
Thank you, thank you. All right, one other question over here. I'm coming right over. This is such a great conversation. I speak really loud. Oh, no, we want to hear.
I have a quick question. We're encouraged. Increase your, pay your bills on time, increase your credit score. Why is it that when I pay off my house, my credit score dropped all the way down?
It's really an honor. Right.
Coming right up.
That recently happened to me. My credit score dropped 27 points.
Yeah, I was about to say 30 points.
Yes, yes. My score dropped 27 points recently when we paid off our home. That installment loan is closed. That age is gone. You know, you've maybe been paying on it 15 years, however long. It's over. That's not.
But
yes.
I'm getting to retirement age. So basically what you're saying is, I gotta stay in debt. In order to have credit.
Yes.
That doesn't make sense. Because
Right.
That's the American way.
That is the
my son
American
even noticed that he's young, and he's like, well, why establish credit if, in order for me at 28, when he paid his car, his credit score.
What happens if he need another car?
Yeah, but I understand, but he worked hard to keep the 800.
It's not that the credit score will plummet 100 points.
Right.
It'll drop a couple of points. It's not gonna make that large of a difference,
Right.
but for future transactions or purchases that he needs, he's already established a healthy credit history.
And the fact that he has a home would help.
Okay, we gotta wrap it up, guys. I'm about tired. Okay. This has been a fruitful conversation.
This has been the best
People are still talking
one.
about it, right? Yes, and Adam is available to answer questions after. Nekiba, you want to answer? All right. This has been a great conversation, you all. Let's give them a hand clap. Evaluations and, of course, for this particular session for Credit 101.